I haven't come this far, in my career. I don't need to make money every day, and I don't say that to be, to sound like, hey, I've made it or anything, but I say it in the fact of like, I built a cushion. I don't need to come in every day.
Welcome back, everyone. Today we have the chance to sit down with Anthony Crudele, a full-time futures trader with over 25 years of experience in the market. Looking forward to talking about his story, his tips, and of course a lot more. And I just cannot wait to get started. Tell me a bit more about kind of what you're doing these days and where you're at in trading.
These days, really not much different than where I've been the last several years. Mostly swing trading, futures, doing some stocks as well. I've always done stocks really more on a longer term portfolio. So I'm actively managing it, but I'm not really day trading them at all. I mean, sometimes I do, but it's just not often. And also with futures, I mean, there's days where I'm more active than not, but I really try to stay really patient and focus really on my strongest setups these days and try to keep myself from being overactive, because usually when I'm overactive, not a lot of good things happen.
You've been trading now for over 25 years. Tell me how that all started 25 years ago.
It started by accident because I was coming out of high school and I got into a car accident, and I actually took an ad in the paper to become a runner at the Chicago Mercantile Exchange. I started at Lynn Waldock. I think minimum wage was like $3 or something back then. And I got to the trading floor, to make a long story short, and knew nothing about it, knew no one there, made friends, loved it. The excitement from it just pulled me in. Never went to college, never did anything else. It's the only thing I've ever done outside of high school. And, just became a member of the exchange at a very young age. I was 20 years old when I started going through membership. And right when I turned 21, not too soon after, I was waiting for a seat, I became a member. And I was trading in the pit, but along that time, I was also working in the Globex room, we used to call it, and I was looking at the E-mini S&P, which had really just launched. It launched in the end of '87, and the year I was going through membership was '98, and so I was practicing on the computer at that time, and then once I got my account, I was trading on the screen live in the morning on the computer, and then I was going into the pit, and eventually just the pit wasn't for me. The screen was definitely my place, and I was fortunate to be at the inception of the E-mini S&Ps, and that's where I built my career.
How did you learn trading? Was it through any mentors you had on the pit, or did you kind of learn by yourself, or how did you make your learning curve through trading?
Well, mentors played a huge role in terms of mental guidance. They taught me so much about what it took to be a trader. They didn't necessarily teach me how to execute as a trader or told me what to do, but they kept me in line, and they kept my mind right, and they helped me with things to look at, and I would, pick their brain about so many different things. I mean, trading is such a long journey, and there's so many things about it that you have to learn along the way. It's not just X's and O's. I always look at the greatest quarterback of all time is Tom Brady. Was he the best quarterback, really? Probably not. He was the best executor of his plan. And I think that he was the most prepared. I think that he was definitely not the most talented. And I look at trading in a very similar way. I think Tiger Woods is like that too, even though he might have been the most talented, but he's also the hardest worker. And like, as he evolved as a golfer, as Tom Brady evolved as a quarterback, the inspiration we draw from them is, the hard work that they put in and just like being able to sustain it at a high level. I don't think that people talk about sustaining trading at a high level long enough, because I went through so many ebbs and flows at the beginning of my career. I sucked at the beginning like everybody else. And, that was one aspect of it. Then I learned how to finally make some money, and I made some money. And then I was losing it again, and I didn't really know what to do when I had money. So I had a plan only to make money. I didn't have a plan on what to do, manage expenses, pay taxes, grow my wealth. What do I do in the next, drawdown now that I've made some more money? Like, there's different levels of it. You're testing yourself along the way. So the mentors played a huge role in that. And it's just experience, man. It's getting your hands dirty. It's going out there and actually doing it. And I think that's, everybody's going to be different in their learning curve. Everybody's going to be a little bit different in terms of how much a mentor can help them or not. Some people will be more technical. Some people will be more fundamental. But at the end of the day, the journeys are going to be very similar.
This is a good point you make, though. It's the fact that a lot of people think that once you become successful, like once you become profitable, then you're kind of done. Then that's it forever. Like, you're going to be good forever after. Tell me about what does it take to maintain success in trading or maintain that kind of consistency with trading over the long term, over like 25 years, like you did.
Yeah, I mean, I really wish it was like that. I really wish it wasn't the way it is, because we're human beings. I mean, if you're building algorithms or you're doing high frequency trading and you're going that route, it's different, right? I mean, you're still tweaking it along the way. I mean, not every electronic algorithm HFT firm is still in business that was 10 years ago, or even maybe just a year ago. So there's always change. And so success over a long period of time comes from you putting your ego aside and really embracing the fact that it's going to take a long time. And if you embrace the fact that it's going to take a long time, and if you embrace the fact that you have to actually follow a process. I know it's a cliche. It's kind of it's used too much, like follow your process, manage your risk. Those things are important, but you as a person have to evolve and have to really want this, and you have to have a level of commitment that's so high in order to maintain it or sustain it. You're never going to maintain your highest level of success. Not even the best of them. Not even the best of them, because there's no way my best years are sustainable each and every year. It's not possible. I've never been able to do it. I've only been able to have like really good years, and then really I've had a lot of mediocre years or some really years that just do nothing. And so you just never know when that's going to come. There's no way I can say that because if this year was my best year, that next year should be better. That's just not realistic. So you have to believe in that and understand that. And that's what will slow you down and allow your short-term results to be the best that they can be without you forcing yourself into a situation where you're trying to force results and you're trying to, live up to what you think expectation should be. I think that is the only way I've been able to survive, is because I'm just like, well, today's not the day, this month sucked, this year wasn't great. What do you want to do? Do you want to figure it out, or you want to complain about it? Nobody's going to listen anyway. So, I think that's really what it takes. At least that's what it's taken for me.
I think a lot of people who are like high achievers will try to like break the record. They will try to like get the best year after year and like be better and better over time. I'm sure there's some things you can do to become better and better over time in trading, but what do you tell these people who want to become like better and better all the time?
Well, I think I am better every year. I would hope so, but that doesn't mean that I make more money, right? I look at it like, I watched this Roger Federer documentary the other day, and I thought it was absolutely fantastic. I was a huge fan of his. I think he's great for sport in general, and I just think his demeanor and the way that he conducted himself is very admirable. And I think he's just one of the greatest athletes we've ever seen, at least in my lifetime. And you look at him, and when he started to break down a little bit at the end, then you realize he didn't have the body, but he had the mind. He had the mind of probably still the best tennis player out there, right? It's always arguable who the best tennis player is, right? But his body just broke down a little bit, and he had to deal with these emotional struggles along the way, and it was just like, if he had the perfect body with all these new guys coming in, he still had to learn different players. Like Novak got the best of him later, right? Nadal, he got him early, and then Nadal and him had great battles. And it's like, that doesn't take away from their greatness because they've lost or because they weren't as good all the time. Like they maybe mentally were better to handle the situations, but it doesn't mean that his best tennis was going to come later in his career, even if he had the best body, because his opponents are different. And it's hard to accept that fact as a trader. I've accepted it because I hope other people are great. I hope other people are better than me. I don't really care. I wish good upon people. I know that I'm not the best, and I never claim to be, and I don't care to be. I don't think to be. All I want to do is exist in my world, and for me to have the most control over my game, right? I want to be the one who decides when I hang them up, or I want to be able to just hit, swing my swing. And I think that's when it comes down to a trader, to try and compete and try and think that you're going to be the best, or to try to be that competitive with it. Yeah, I'm the strongest competitor out there with myself, but I don't really try. I look at it like this: if I can't get too ahead of myself and beat myself up, because then it just sets me back. And so I think it just really comes down to, once again, believing in the long term. I mean, I'll be 47 as we record here in a couple of weeks, and I look at it like this: I started when I was 21, and I look at it like when I'm 60 something years old, I want to be able to have the same demeanor. I don't want to have health issues. I want to be able to control and swing my swing. I want to do me. I don't want to worry about trying to be the best.
And this comes down to expectations of traders too. Like, I'm sure you have people who reach out to you because they have a show now about futures, and you've been having this for a long time, who want to get certain results. So they ask, like, how can they get there? You realize they have like really big expectations. How do you kind of set this down? Can you tell someone to not target as much returns per year, or is it something you just cannot do?
Expectations are tricky, I mean, because I think that most people have reasonable expectations until they get into a moment where they make some money, and then all of a sudden their expectations increase in the middle of the day or in the middle of a trade. It still happens to me. It sucks. It's the worst, because you're like, oh, I want to make $1,000, right? You get up 1,200, and next thing you know, you're like, I want to make 2,000. Next thing you know, you make 2,000, you want to make 5,000. I mean, it's just, expectations are our worst enemy, because the market doesn't know what they are, and the only way that we have a clear path to higher, I don't want to even say expectations, but better results, is by being so much in the moment that at that moment I realize if I should be increasing my expectations or not. The self-awareness in that moment is the only way I'm able to do it, right? I mean, I go back to the other day, I was trading and I was doing pretty good, and I had a day where I was up about average what I would be up on a day like that. And then all of a sudden I got a little busy, and next thing you know, I got what I call my own personal fast market, and I traded myself from, going to have, probably a 5-figure day to a 5-figure loss. It's just it's very frustrating for me, because it's like, what did I just do there, right? I mean, all of a sudden I stepped on it in the wrong moment, and then I had to rebalance myself again, and it was just like, okay, why would I do that? And I did that because at that moment, it was like it got busy for a moment. The next thing you know, I had the biggest size on all day because I was up money. And my mindset is always take when the market's giving. And then all of a sudden, the market just sucked it right out of my account. And really, the market didn't do it. I just let it happen. All of a sudden, I became non-defensive. I became so much on the offense that it just kind of blew me up, and it was like, okay, and I go from having a good run to all of a sudden now I'm going to draw down. And it's like, okay, now mentally, how do I work out of that, right? And that just happens from time to time, and sometimes I need those. Sometimes I need those to reset myself. I don't want them. Nobody wants a loss, but sometimes I'm like, okay, dude, what are you doing here? I was so pissed, and I remember just settling down, being like, take a breath, man. You're going to be fine. Like, you know what you did. If you didn't know what you did, then you got problems, but you know what you did. You let it take advantage of you, move on. And so I think that expectations, what happens is that they come and go, and then like all of a sudden you get recentered, and you hope that you didn't blow yourself out to not be able to be recentered.
I think you definitely need these times from time to time. Not fun, like you said, but definitely needed to reset.
Oh man, they put you in your place quick.
I love it. And people are going to want to know, what's your trading style? Like, what do you focus on these days? You want to walk them through kind of what you look at, what kind of strategies you focus on?
Yeah, my strategy is pretty simple. I mean, Bollinger Bands is the base, is the core, 20-period, 3 standard deviations. I look at that and identify in a simple way what the market environment is. I look at the market in really just a few different environments. I look at it as its range expansion. Are we in a trend, and is range expanding? Right now we've been in a bull market higher, ranges have expanding, and even though the VIX is low, volatility is still up a little bit. Because the NASDAQ and S&P and Russell are still volatile enough, I think, to where we're in this mode where it's like, they have the energy to make new highs, right? Then we get in what I call mean reversion or consolidation. Everyone's aware what that is. And then it's like, okay, you change, you change it up a little bit, and I'm not just only trading long. Now I could potentially trade short, or I actually am trading smaller, and I'll actually try to find ways to trade both sides of the tape. I really try not to do that intraday almost at all. I'm almost only a one side of the tape trader. Very, very rarely these days do I trade both sides. And usually when I do, most likely one of them was a loss. So it's never really that good. My stats prove that to me time and time again. And, and then the other environment would be just range expansion lower, and then are we in a bear market, right? And then we're range expansion lower. So, and then I just narrow it down in the short term. I use some order flow tools, and I just use tools in the short term to help me execute the bigger picture. Bigger picture always supersedes the short term. But on the short term, it helps me just become a better executor of my strategy. So I use order flow tools, I use anchored VWAPs, and things like that. And they're not the end all be all really for me, but they're just really good guides. I use some RSI as well. Simple tools, but it's not about the tools themselves. It's just about how I execute using them. It's the mindset, it's the position sizing, it's the direction I'm focused on. And that stems more from Bollinger Bands and daily charts.
What does your 3 standard deviation Bollinger Band does compared to like the typical 2 standard deviations? Is there a big difference in terms of what you spot with these?
Slows it down. That's all it does. Slows it down, and it gives me a little bit of a wider perspective. A 2 standard deviation Bollinger Band is just tighter. And I think that equity indexes, especially as we move higher in prices, the percentage moves are smaller, but the price moves are bigger. And so I like 3 standard deviations. Like if I'm looking at a 10-year, you probably can go to a 22, just because there's not a lot of volatility in it. And then that's really the only difference is that, once again, I always say it's not the tools, it's the person using the tools. And any strategy you can find edge in, if you're really good at noticing them.
So these give you extreme points. So they give you an idea of like what the market's doing and like the context. How exactly do you use them?
Well, I look at Bollinger Band peaks, and if Bollinger Bands are expanding outside the previous peaks and the market's going in that direction, then it's telling me we're in range expansion, right? And so Bollinger Bands, as the market's going up or down, is doing a, 20 period is the mean, and it's a 3 standard deviation move from a 20 period moving average. Okay, so if it's moving 3 standard deviations up on the top Bollinger Band and we're going higher, right? I look at that previous peak. If we're expanding outside of that previous peak, that means that where price is now, a 3 standard deviation move is now further out, right? And so the projections of going higher is greater, right? The probability is greater. If the Bollinger Bands are starting to come back inward, what they do is they tell me is that we're in range mean reversion and we're in consolidation. And so that tells me that where the likelihood of the range expanding now is decreased. The probability is decreased. So now I can trade back to the mean, back to a moving average, back to something. And that's what I look at.
Interesting. It's kind of like a high level too. It's pretty good.
It is. It is similar to that.
Tell me, how's your routine with that kind of trading style? So do you have a typical routine you do like every day to take care of trading, or how do you run this?
I mean, my mornings are all about the markets. I wake up in the morning, I read the news, read Twitter, what's going on. And from there, I decide if it's worth me trading or not. I mean, I keep it to the point of where, if there's volatility and we are, and the move is clear to me, then I stick around. If it's not, then I don't want to try and force things anymore. It really comes down to me is quality of life, quality of trades. I want to have stronger hand in the market. I hate having a weak hand. Like every time I find myself over trading, it's just the worst of me. It's the worst of me in so many ways. It just sucks. My life sucks, because I feel like shit. I'm tired. I'm pissed off. It's like, what am I doing, right? If I know that the market is in a direction and I lose in that direction that I wanted to execute in, I don't seem to care as much. But when I lose by over trading and not properly executing the direction I wanted, well, that pisses me off. And then it's just like, it's quality of life, it's quality of setups. They all feed together. I haven't come this far, in my career. I don't need to make money every day. And I don't say that to be, to sound like, hey, I've made it or anything, but I say it in the fact of like, I built a cushion. I don't need to come in every day and, and have the ego out there and like, and show that I could still do it. I mean, there's days where it's like, I'll kill it. And they're just fewer and far between in certain environments, right? Like during COVID, it was busy all the time. I was at the screen all day, but it's like, if we're in a grind up bull market, my stock portfolio is doing great. Awesome, right? What do I need to trade for every day? I've been long stocks, right? What am I going to come in and screw it up? And so it just depends. Different bear markets, I'm more active, right? There's news, I'm more active. We're grinding up in a bull market. I look for days where I can be long, use futures as, their natural leverage and make money. I don't want to come in there and just fade NASDAQ every day. That's the path to the poorhouse.
That's a good point. I know some people have a tough time to do that, to like step away for a day when there's a thing in the market. They want to try to fight it, try to make money that day. Has this come from practice and like experience over time, or is it something where you look at your journal, you should have been trading that day because of the past experiences you had?
It's funny. Everybody wants to start trading because they want financial freedom, they call it, right? I want to be able to do what I want when I want. And what happens is you start making a little bit of money, become a junkie. You're in there all day, every day, and you think you're going to continue to just kill it. And it just doesn't work that way. And you just keep getting taught these lessons. And as time goes by, you're like, well, every day isn't necessarily working out for me so well, is it? And so you just smarten up. It's just time, right? Either you get to the point where you realize that day in, day out, you are not going to beat the market, then there's going to be times where that is the case, where it does work. But that's not all the time. And so most people know that, and most people recognize that, but it doesn't matter. Most people feel like they need to make money. Most people have good actual work ethic. Most people are really good people that come into the market with good intentions, and they think, I just want to make money. I want to provide for my family. Problem is they get so attached to the outcome. They get so attached that that's the way they have to do it today because I'm here. That's what screws them up. And they forgot that the reason why they did this is because they get to pick and choose when they want to do it. And so I think that's the mistake that most people make, especially younger people, right? And they want to get in a hurry to make a shit ton of money. I did too, I had a lot of money when I was in my late 20s, and I blew up a lot of it in my mid 30s. I was like, what did I do? It just happens. And then you get to your 40s and it's like, okay, you invest your money, you do other things, you get smarter. Everybody's got to go through this. There's no one's going to tell you something that's all of a sudden going to fix it for you. You're going to screw it up. And the only way you fix it later is by screwing it up now.
Tell me about some of the mistakes you see people make in trading. You have, of course, a show. Yeah, people, I'm sure, reaching out to you, like asking for advice. What are some of the mistakes that people make in general? Is it the same thing that they've always done, like all the same mistakes come back over and over again? Or do you feel like people have different mistakes that they make now than compared to like 10 years ago or something?
Well, there's a few common mistakes I see that, people ask me about, and I do a lot of free, mentoring calls with traders. I don't have a service to charge or anything anyways, but, I'm happy to help out anybody if I can, if I have the time. A common thing is people think, okay, it's psychology, right? Finally, somebody's figured out, they think they figured out a strategy, they've made some money, then they think it's psychology, and they're like, oh yeah. My psychology is what's holding me back, man. I just, it's whatever, right? And then when you hear them talk about what they're looking at for a strategy, they can't elevator pitch it in 2 minutes. They can't tell you clearly what they're due, right? And so their mind is just all over the place. And it's not psychology. It's just that they haven't properly put forth a plan that they believe in so much that they're willing to just execute it and do it, right? And so they're just trying to do too much. They're trying to make money all the time. They're long, they're short. They see edges that aren't there. And most people, they think it's psychology because they feel that they've found a strategy that works, but they don't lean on that strategy. They just actually are just trading all the time. That's a very common one. People talk to me about holding winners longer, which is another one. They're like, oh, I'm great. I make money a lot, but then I'm not making enough for when I'm wrong. And then what happens there? And it goes back to for me, it comes down to the execution of your strategy. Like you have to figure that out, and like how do you maximize win and even just reduce the amount of losses or not necessarily reduce the amount you lose, just reduce the amount of activity you have on days that are not conducive to your strategy. That is so important, right? And so it's like recognizing that. That's like kind of part of like finding your way as a trader. So like those traders are like really close to really breaking through and making more money, but they just kind of keep holding themselves back because of too much exposure or, just other little nuances that are happening, and just other people are just, they're just too big, they're in a lot and they're just trading way too much, they're just like expectations just get the best of them where it's like, they're like, eventually they just say, they throw in the towel. It's kind of a cry for help. I know that because I've been there, they're grinding. And then all of a sudden they're like, you know what? I don't care if I lose. And it's over. And it's like, then they try to start over again and they put money in their account again, or they try to get funded again. And it's just this cycle. And so those are things that are very common because most people are so focused on the outcome of the short term that they've lost sight of the outcomes that come from being long-term, that the short-term outcomes actually get better, right? And so their mind is fixated on that. And I know that because as a 21-year-old kid, and I say kid because at that time I was thinking like a kid. I was thinking about today. What can I do today? Like as 47-year-old guy, I look at it and go, what can I do for tomorrow? And my mindset's very different. I don't worry about today as much.
Tell me about the impact of this. So looking at the long-term versus the short-term in trading.
I think the point is you have to start thinking that you want to do this over a long period of time. And that will allow you to focus on the days more efficiently, because if you think that today is the day you have to produce, your mind is on, I need the outcome I need today. That's the problem. Like I lose on days, it sucks, but I'm like, listen, I already know in my mind how I'm waiting for the next opportunity, right? It may not be tomorrow. It might be in 2 weeks. I might need to take 2 weeks off. I don't know. But ultimately, at the end of the day, I don't think for just one day does not really matter to me. Sometimes it does because I'm an idiot and I think that today's the day, right? But that's okay because once again, like I did it to myself not too long ago, where it was like, I blew a great day. It's because I just got so aggressive and I just got blasted. But it's just, that's going to happen. But it resets me again and I'm like, okay, I know what I did, chipping away at it. I don't care if it takes me 6 months to make that back. And usually if I think like that, I'll make it back in 6 days. But most of the time, people want to make back yesterday, today. And that's the problem.
How do you get back on track from let's say a bad losing day or a bad drawdown? How do you make sure you go back on the right track and of course, you want to make it back, but how do you do it the right way?
You lean on your favorite setup. That's it. What's my favorite setup? Until it comes, I'm not doing anything. I'm waiting. That's it. When it comes, I'll do it. Then I'm forced to do it. I mean, that's it. That's the only thing I do. That's the easiest thing for me because if I lose on it, I won't care. I won't feel bad about it. I'll feel bad if I stepped in and go, oh, we're down 50 today in the S&P, and I go and I try to buy a 10 lot and I say, no, I lose $5,000. Then I'm pissed. Okay, but at that point, if I'm just waiting for an opportunity that I know I want and I see it and I waited for that moment and I'm relaxed, then good things probably come. If they don't, then that wasn't the one anyway. But that's the only way for me to reset is to lean on my preparation.
Tell people where they can connect with you or find out more about what you do after this podcast.
Oh, everything I do is at anthonycrudele.com or at Anthony Crudele on Twitter.
Awesome. Put a link below for that. And today I appreciate your time here. The rest gives to listeners. I'm sure they get a lot of value out of this. And hopefully you can catch up and see how you're doing in the future. That's pretty cool.
I really appreciate you inviting me. Thank you very much.